Euro. Now, let's take a look at Euro. This really, I like Euro. I took some nice pips of Euro yesterday, about some 80 pips. Now, if you look on the monthly, right, we're trending to the upside. We've seen that since May when the economy started reopening again. Remember in March, we had, like, look at this madness of a candlestick. You know, everyone was like piling into dollars at first because we were panicking. And then we've since seen recovery, signs of recovery, consolidated here. And now Euro forced a big breakout in November. And that coincides with that negative month for the dollar index, right? That showed you really significant here, how we're breaking out of like this sort of period of consolidation, this flag structure, right? We had the breakout and we had the retest, and it makes way for further upside pressures, a lot of upside pressures. Now, if we look again, this price action here is very reminiscent of what we saw here in 2017. I guess that coincides with what we were looking at the dollar index, right? And then we saw that, you know, we had this period of consolidation. We had that breakout to the upside. Now, why should Euro continue? Let's put some points here quickly. Okay. So dollar weakness, as we've gone over, Eurozone recovery ahead of US. Now, why do I say that? Because Eurozone went into lockdown, right? They've taken the action before the US. So in theory, the Eurozone are winning this economic recovery race because they're taking action already. The US is still open for business, right? As if nothing's going on, you know, and with that being said, it's going to, we've seen, like, look at US COVID cases. We went over this, didn't we, in our last call? Look at US COVID cases. They're still very much elevated, right? You know, still firmly in the mid, you know, around 150K, whatever. It's very high, right? So what's my point here? My point is they're going to have to take action at some point, and they'll have to go into lockdown, right? And all of this delay, this further delay, where the Eurozone have acted, they were quick, right? Going into lockdown again. Where the US are going on and on, letting this drag out, it's going to have, it's chipping away at economic output, economic growth. It will have further damages down the line, further repercussions. So that's going to force FOMC action. Okay, so the FOMC are going to have to flood the market with even more dollars. That's what we're expecting in December this month to take action. So, you know, with the Eurozone ahead somewhat of US, remember, when we're looking at fundamentals, we're comparing each economy, right? So in this case, we're comparing Eurozone versus US, right? So in theory, Euro should continue to push the upside, is my point. Okay, ECB are expected, the European Central Bank are expected to act in their rate decisions next week, but I believe it's priced in. So any dips that we do see, probably going to be bought, in my view. Hey guys, enjoying this video? Well, Ken Zen want to help you become a profitable trader. Click the link below to access free content, trade ideas, and to be consistently updated about the markets to help you make profitable trading decisions. Well, what are you waiting for? Sign up via the link below, or you can be finding that in the bio. So that was a long-winded explanation, but I hope you get that. If we look left here, I was going back to 1994, 1994. Just my point about, I did a video on this earlier in the week, just about history repeating itself. Look, similar sort of consolidation as we've seen recently before extending to the upside. You know, history repeats itself. You know, the data's there. What we're seeing today is not new, right? This has happened before, somewhat, right? So let's see what's going on the daily. That was that very erect candlestick there yesterday. Huge performance for euros. Now we've got to expect, okay, we've had a big run. We've got to have a bit of a technical pullback, right? A bit of a technical correction. It makes sense. You know, when we see very one directional moves, you know, people are going to take out profits. The market needs to correct itself. So that's exactly what we're seeing. So where do we get back in onto those longs? Well, this is where the higher time frame comes into play, right? We start looking out for those key, you know, weekly levels or daily levels. Like in this case, you know, a key weekly level is clearly at, you know, let me just make this nice and psychological and round. You know, a key weekly level is 120, right? So whether we get that pullback to 120, if we look at the daily, yeah, look, 120 is a significant level of where you'd want to be scoping potential re-entries and longs. You know, you can see it's definitely served some purpose in the past. Let's see what's going on the 4 hour. Yeah, just a bit of cooling. It would be very attractive just to come into this zone. You see, I've got this zone marked up on the day. It's a daily zone. You know, just where we've basically found both resistance and support. So for me, I'd like to see anywhere within this region here, anywhere here would be attractive to reload and longs. If that 120 fails to hold, then we come and retap this previous top area all the way back down to 1960. But that would be quite an extreme pullback. I don't think it would be that steep. You know, you see, look, top, look, top. And this is actually where I got in on an entry yesterday, right? So we had, where is it? It's on the lower time frame, but you can just see it on the 4 hour. Oh, I'm still drawing, sorry. Okay, so you see how we topped at 120 earlier in the week, cooled, and then we came down to this big area as well. This is a big daily area around 1930. I was watching for this breakout back above this key sort of 1960 area, waiting for the retest, and that's where I got in on that retest. Probably see it on the hourly as well. This was it. This is well, really this the extra confluence, this flag as well.